going to get started. Welcome. This is part of our monthly best practice webinar series. And today we're going to cover something that is really important for business owners, as you'll see, and that's planning for profit. One of the ways that we help our clients is by utilizing Profit First. And so we're going to really dig in on that. Also, in July, we had a new tax bill pass, so we're going to spend a little time talking about that and applying this tool to the tax savings from that. So with that, I'm going to minimize that and get started. So, legal disclaimer, this content is for you, our clients and friends. All we ask is that you let us know if you're going to use any of the content, but we encourage you to use it. We're going to, in fact, make a recording of this available on our website shortly after this. A little bit about us. We consider ourselves your partner without equity, passionate about helping clients build businesses that support their fulfilling lives. We have clients at all stages. Worthwhile plans take time to realize. We work together with our clients to create plans that fit them. And it's really all about our goal, which is helping clients solve for total life enjoyment. Today's agenda, we're going to cover the entrepreneurial journey. We're going to look at entrepreneurial poverty versus a profit-first business. We're going to give you an overview of Profit First and look at applying Profit First to the tax savings that you can count on after July's tax bill. And then we're going to talk about how Profit First is something that you can roll out in short a time as 5 days. And then we're going to have some time for question and answers. And with that, we'll jump into the profit or the entrepreneurial journey. Oftentimes, this is what it looks like. We start a lot of optimism, and then reality hits, and so does entrepreneurial poverty. However, with intention and a good tool like Profit First, you can end up over here. And so what are the symptoms of entrepreneurial poverty? There's a ton of money coming into the business, yet there's not an increase in cash reserves. Your bank accounts are empty. There's nothing left to pay you, the risk taker, the entrepreneur. And so essentially, you're working without reward. Inconsistent cash flow wakes you up at night, and your dentist even asked you if you grind your teeth. Now, symptoms of a profit-first business are there's tons of money moving, and there's an increase in cash reserves with every deposit, as you'll see when we get into Profit First. Your bank accounts have dollars based on the proven target allocation percentages, and there's a separate account for owner compensation, so you always get paid for your work. Inconsistent cash flow is addressed by the approach since it's based on collected revenue. That's key. It's not accrual, it's based on what is actually flowing into the business. So this is going to help you understand why there is entrepreneurial poverty, and it's also going to help you understand why Profit First works. So most businesses have only one account. Everything is paid from that one account. The owner compensation, payroll, rent, you name it, it's all coming out of one account. C. North Coast Parkinson said, our demand for a resource increases to meet the supply of it. That's why the same project will take 2 weeks or 8 weeks, depending on how much time we are given. Same work can be done for 1,000 or 10,000. So one thing we know for sure, we've been in business for over 50 years serving entrepreneurs. We know we can't change you, but the good thing is with Profit First, we don't have to. All we need to do is change the approach. The approach that we've found that works usually is Profit First. Profit First leverages the habits of the entrepreneur for cash flow success. So again, we're not looking to change your habits, we're looking to leverage them. Pure willpower and one bank account are not enough. But just like a muscle, willpower can be exhausted because over time the financial stress gives out and entrepreneurs break their own financial rules and spend the money they have. Remember Parkinson's law. Profit First principle doesn't try to change your habits, but work with them by allocating money as it is flowing into the business to the different accounts that you'll see in a minute. So essentially, most entrepreneurs are naturals at bank balance accounting. They log on to their bank and look at the balance multiple times, usually throughout the day. And so Profit First encourages the entrepreneur to continue bank balance accounting. And you can see with Profit First, the actual portion of deposits that are available for expenses and can automatically, so if there's not enough available, you can automatically adjust your spending accordingly by going vendor by vendor to cut what you don't need to keep, essentially ensuring that you continually improve your financial operation. So the setup for Profit First is, as you can imagine, you're setting up more than one account. So you're setting up in the standard version of Profit First, you're setting up 5 accounts. There's an income account, a profit account, a tax account, an owner pay account, and an operating expense account. You're also setting up 2 additional accounts at a second bank. And we'll talk about this in a minute. Now, how much you're transferring out of that collected revenue is determined by the target allocation percentages. And so these target allocation percentages are ones that the author of Profit First, Mike Michalowicz, has determined in his years of research, and Profit First professionals like us have proven that these are the targets that elite cash flow entrepreneurs deploy. So this is what these targets look like. And if you take a minute and look at this table, you'll see that they change based on the revenue of the business. So this is collected revenue. And so you can see if you're a new business starting out 0 to 250,000, your profit allocation is 5%, versus if you've been in business for a while and your revenue is $1 million, that grows to 10%. Now, one thing that in looking at this, you'll see that the one allocation that doesn't change is tax. So that is constant at 15%. So you might be looking at this and saying, well, that's not realistic. I'm not there. That's where your Profit First professional comes into play, and we can work out a rollout plan. So maybe you start out with, instead of 5%, you start out with 2%. just to get it going. And we'll talk about that when we look at kind of the 5-day rollout of Profit First. So here's what the activities look like on a timing basis. So daily, all your receipts go into that income account. You keep on with your bank balance accounting, and you spend a minute throughout the day to see the cash flow trends. You're seeing what is in each of the account with the intention for either profit, for tax, for owner compensation, or operating expenses. That's all the time you need with bank balance accounting and Profit First to see where you're at on things. Every week, you will have a situation where you're taking what has been collected in that income account and you're allocating it to your other accounts, the profit, tax, owner pay, operating expense accounts based on the TAPs. So that's where we go back to these targets. This is what's driving those allocations, and it's based on collected revenue. So what ends up in your operating expense account is what you're using to pay all of your operating expenses, whether it's your rent, office supplies, payroll. And it's not uncommon for a new Profit First client to say, hey, look, I don't have enough money in my operating expense account to make all of my payments. And so that's when you go vendor by vendor and you go through the process of determining which ones are essentials, which ones can be replaced, and which ones you can eliminate. So it forces you to continually improve your financial health. Now, with the profit and tax account, Mike McCallitz determined when he was designing Profit First that business owners have a tendency to steal from themselves. So they'll say, hey, I'm short on my operating expense account. I'm going to take some money out of my profit account and then I'll just restore it. Well, we know that just restore it activity never happens. So in order to lever that, Mike designed this second transfer where the money in the profit account and the tax account are transferred to a second bank. Now, this bank is harder to access, and that's okay, as you'll see when we look at what the quarterly activities are. But that's intentional to remove that temptation that the entrepreneur has. Now, you might be thinking to yourself, this sounds a little complicated, figuring out what these transfers are, and it's easier than ever now with banks like Relay that don't charge for these transfers specifically, and you can automate the transfers. So based on those targets, you can actually load those up into your Relay bank account and have those happen automatically. So with this system, you're continually improving your financial health. You're always ensuring that you have profit because that first allocation is to your profit account. And you're forced to find ways to get the same things done with less money. And you're turning that small plate concept into Parkinson's law and an asset for your business. Now, every quarter, you're distributing as a profit distribution 50% of the accumulated profit to the owners, and you're paying your quarterly taxes for the business out of the tax account. And then you're looking at whether you need to adjust any of these targets. Maybe you were successful in increasing your revenue and now you've jumped up into another band. You just go back to your targets with your profit first professional and adjust accordingly. So you're continually improving. You're always receiving a profit. Some businesses prior to starting profit first have accumulated a substantial amount of debt. That's okay. You can allocate some of your profit distribution to eradicating that debt. So maybe 90% is used to pay down debt and 10% as a profit distribution for the period where you need to repay that debt. Every year you're reviewing your targets, and as you progress, you can even set up things like a vault or additional accounts to transfer to, like retirement accounts or ones for capital purchases of equipment that are substantial in monetary value. And so you can just set up another account and start allocating to those accounts. So now, as I mentioned at the start of this, we're going to talk about, how Profit First addresses the tax savings. So fortunately, in July, the tax bill was extended, and depending on your income, you can count on, if your income's 40,000, roughly an extra $700 in tax savings, or 41%. And if you're fortunate to be at $1 million, that is 30,000 or 9%. So like that extra tax savings would, theoretically be sitting in your tax account. And that is just an extra profit distribution for you at the end of the year when all of the taxes are paid, and you empty that account and then start saving for the next year's taxes. So Profit First, compared to entrepreneurial poverty, is awesome. And one other thing that is great about it is it's easy to deploy. Within 5 days, we can set a client up on Profit First. We set up the profit and we set up the tax account, and then we may start the client on 2% to 5% into each account, and then keep it going, allocating each week and then quarterly, working with them to distribute 50% of the profit accumulated in that account. As I mentioned, large debt balances are not a reason not to start Profit First. It just, we're going to take a chunk of that to pay down, chunk of that quarterly profit distribution to pay down debt and make sure that the taxes are paid from the tax account. So we've got almost 10 minutes left. I wanted to leave it open. We've covered a lot. I'm gonna stop sharing for a minute and open up the floor to any questions. And then don't leave. We've got a special offer at the end if you want to try it. So just opening up the floor. Go ahead and you can either chat in a question or you can come off mute and share your question.
Tim, if you had to say kind of the greatest benefits to clients that you've worked with from a Profit First perspective, like what have been kind of immediate wins, or some of, like, whether it's short-term or long-term benefits that you've seen within individual client settings?
I think that's a great question. On the immediate end, I think it's encouraging if they've never received a profit distribution to see an account that's earmarked profit. And they can see that account growing, even if it's a small amount. And then that's immediate because it's bank balance accounting, profit account is set up, they can see that. Slightly longer term is when it comes time to make tax payments, they've got dollars in their tax account, so it's earmarked for taxes. As the business grows, so do those dollar balances grow, so it adjusts automatically. Does that answer?
Yep, thank you.
You bet. Great question. Anyone else? All right, well, you guys are letting me off easy. I'm gonna jump back to our offer. And so there's nothing like the experience of doing it. And so to take the risk out of it for you, and with in mind that our goal is to help you try. For existing clients, we'll give you a free profit first rollout plan. And for business owners that are not a client, we'll give you a free discovery meeting and we can kind of talk through what that looks like in our involvement with you. So thank you for coming and being a part of our monthly best practice webinar series, and we'll see you again next month.